Did you know that an expert believes that Tesla stock will go 10x in the worst-case scenario? Well, some may argue that Tesla stock's current valuation is indeed in the worst-case scenario already, as it hit an all-time low. You would not want to miss this one. According to content creator Stephen Mark Ryan, who handles the Solving the Money Problem YouTube channel, his bear case for Tesla stock this year is $420 per share. However, note that this prediction was made prior to the stock split in August. After the split, that would be $140 per share. Stephen also emphasized he has a true bear case for Tesla at $921 per share. Again, this is prior to the split. After the split, that would be around $307 per share, which is more than double Tesla stock's current valuation of around $125. Imagine, a $300 bear case for Tesla stock is still more than double today's valuation in the stock market. As many are aware, and as is reflected in the company's stock performance in the market, Tesla stock is plummeting. In light of that, critics are placing much of the blame on the increasingly erratic way that Tesla CEO Elon Musk is choosing to helm Twitter. Even Tesla investors are becoming increasingly concerned about Musk's Twitter distraction, as they call it. Although Tesla has been a monster stock over much of its history, especially from its stratospheric run from mid-2019 to late 2021, the leading EV company's stock has been a big loser in 2022, on track to plunge 57% as of mid-December. That would easily surpass 2016's 11% fall, the only other annual decline since Tesla stock came public in 2010. The sell-off has intensified, with the EV giant losing more than half of its value since late September. After Wall Street downgraded price targets on the electric vehicle maker's stock several days ago, Tesla shares fell 8.12%. Analysts fear that CEO Elon Musk is distracted by his hostile takeover and micromanagement of Twitter, and that China sales will be affected by the Chinese government allowing COVID-19 to spread after ending its stance on harsh restrictions. Tesla shares hit a more than two-year low of $125 at the time of recording. Analysts say investors are concerned Musk will sell more shares of Tesla to fund Twitter, and that his antics on the social media platform are hurting the EV maker's brand. Musk has notably recently sold around $3.5 billion worth of shares, one of many stock dumps the CEO has done this year. As a result, some investors are calling on Tesla's board of directors to replace Musk as CEO, to step in and protect shareholders from the stock drop. Tesla's stock price now reflects the value of having no CEO. "Great job, Tesla BOD. Time for a shakeup," tweeted Ross Gerber, a portfolio manager at GERBER KAWASAKI. It's not yet clear if Tesla EV sales have been affected by consumer sentiment about Musk's Twitter involvement. After all, Teslas are still widely considered to be good automobiles by all metrics of battery range, performance, technology, and safety. Another growing concern for Tesla is said to be about diminishing demand. A big Shanghai production increase and a weak Chinese and global economy are all raising concerns about demand, even with deliveries set to hit record highs in Q4. It can be noted that Tesla cut prices in China in late October and has announced a slew of incentives to clear out inventory, but wait times are essentially at zero. There are consistent reports of Shanghai production cuts, though Tesla has denied them. Tesla may be betting on a big quarter for European sales, but that could draw down backlogs heading into 2023. On January 1st, EV subsidies end in China and Norway, with Germany cutting subsidies substantially. Sweden has just ended its EV subsidies, while the UK is ending its program. Tesla is offering free supercharger kilometers in a year-end European push, along with some temporary UK price cuts. That comes as China's EV competition intensifies, with more and more models from the likes of BYD, NIO, Li Auto, and more taking on Tesla's aging Model 3 and Model Y. Europe's EV market also is getting more crowded. On the brighter side, Tesla will be eligible for new U.S. tax credits of up to $7,500 per vehicle. Tesla still faces far less competition in its home market than in Europe and China, with potential buyers holding off on purchases or deliveries. Tesla is offering $3,750 off Model 3 and Model Y deliveries before year-end, along with 10,000 free supercharger miles. Beyond Tesla, there are concerns about EV demand around the world amid a weak global economy and high EV prices. That could slow the adoption of electric vehicles generally in the coming years. Simply put, Tesla stock is not doing well. However, it is not alone, as even other aggressive stocks have had a terrible 2022. Tesla's EV rivals in particular have struggled, including NIO stock, Li Auto, Rivian, and BYD. Rivian is not far from a record low, but BYD, NIO, and Li stocks are trending higher. More broadly, a bear market has ruled for most of the year. While the major indexes have rebounded from October lows, the S&P 500 and NASDAQ Composite are back below their 50-day moving averages, down significantly for the year. However, Tesla CEO Elon Musk tried to explain why Tesla shares are tanking. In fact, he tried to blame the sinking price partly on macroeconomic factors. When longtime Tesla bull Ross Gerber wrote the previously mentioned tweet where he said that Tesla's stock price now reflects the value of having no CEO, Elon Musk issued a reply. Musk said in a tweet, "As bank savings accounts interest rates, which are guaranteed, start to approach stock market returns, which are not guaranteed, people will increasingly move their money out of stocks into cash, thus causing stocks to drop." Musk notably sold billions of dollars of his Tesla holdings to finance the Twitter deal, including a $3.6 billion sale earlier this month. While Musk has been focused on his new role at Twitter since late October, Tesla has been offering discounts and incentives to sell cars in China, where it operates a major factory in Shanghai, fighting to make its new factories in Austin, Texas and Brandenburg, Germany efficient, and facing persistent supply chain challenges endemic to the auto industry, along with soaring energy prices in Europe, which may reduce the appeal of a battery electric vehicle for many drivers. Those, among other challenges, led Mizuho Securities and Evercore ISI to reduce their Tesla price targets on Tuesday. Mizuho Securities analyst wrote in a note that near term we see potential weakness in Tesla sales as macro headwinds and a weaker consumer could drive lower demand for higher-priced EVs. The firm is still bullish on Tesla long term, citing the company's new factories as a competitive advantage and new electric vehicle tax credits on the horizon in the US, which could accelerate demand domestically. In China, some EV credits are expiring as of the start of 2023. The firm has a price target of $285 and a buy rating on shares of Tesla. A Vanderbilt University assistant professor, Joshua White, who formerly worked as an economist for the U.S. Securities and Exchange Commission, told CNBC, "Only some of the drop in Tesla's value can be blamed on interest rates. Twitter overhang is one important component, China is another huge component. We still don't know if China will be open all the way, and we see there is a supply and demand pressure here in light of the increase in COVID cases and disruptions." He also said Elon Musk may have lost shareholders' trust when he said in April that he didn't plan to sell more of his Tesla shares, but went ahead and sold billions of dollars more. He seems to sell equity in really large blocks, say "I'm done and I'm not selling anymore," but talk is cheap. He says that and then sells more shares. So the more you say that, and investors think he's probably not done, the less confident they will be that the price is going to bounce back. However, Musk responded to a tweet suggesting he won't even entertain the idea that his behavior impacts the stock price. Maybe so, in which case buying opportunity. Musk replied on Twitter, "I keep saying that Fed rate is insane because data I'm seeing says we're already in deflation. If true, then the real rate of return of T-bills is roughly that of the S&P 500. Very smart investor I spoke to today said he's shorting S&P. If Stephen Mark Ryan's bear case of around $307 per share will happen from its current valuation at around $125, Tesla shareholders will be delighted for sure." Make sure to subscribe to this channel for more Tesla stock predictions.